Hello and welcome to FT Markets. Gold bugs are getting squashed, Dr. Copper is not looking particularly good these days, and US crude oil has now re-entered a bear market. So are we seeing the end of the commodity supercycle, and what role is a weakening Chinese economy and a much stronger US dollar playing? Joining me now to answer these questions is Neil Hume, our commodities editor. Neil, what's going on with commodities at the moment?
Well, I mean, the super cycle, as you referred to earlier, I mean, it's not dead, but it's in its death throes, I think, at the moment. We've got a chart here that sort of shows the performance of one of the leading commodities indices. And you can see it's sort of back at the level of 2009. It's got just a bit further to get back to at the point where China really started to take off, and it's huge
really
appetite
around here, right?
Yeah, it's huge appetite for commodities really took off. So it's almost back there, and frankly, sentiment is so poor towards commodities at the moment. I mean, it's the poorest I can remember it. That the odds have to be that it's going to revisit that sort of level, and yes, we're going to see that the whole decade sort of reversed.
Right.
And the factors as to why, well, I mean, the mining and resources industry has spent the past decade reacting to this Chinese surge in demand. They've spent hundreds of billions investing in new mines, projects, oil fields. All this supply is coming on now, or a lot of it's coming on, and has over the last couple of years, at just the time when China is starting to slow, as we've all seen. Right. The global economies, there are pockets that are strong, but overall it's pretty sluggish out there. So demand is just being overwhelmed by this supply that's coming into the market. And based on the forecast, we say it's going to take several years for demand to catch up with this supply growth.
Now, Goldman Sachs this week came out with a very bearish note on copper. And copper's been known, is sort of commonly known as Dr. Copper. It's kind of the barometer of the world economy's health. How big a deal is that note from Goldman when they sort of make those kind of calls, do you think, for the market?
It's a big call because, I mean, what they're saying with copper, copper supply side has expanded, that there is more copper coming on, but really they're saying this is a concern about China, that even though it's transitioning to this more consumer-led economy, demand for commodities aren't going to be as high as they were, and copper is used in wiring, sort of housing, and that's a real indication of how much China is slowing. So as a sort of a barometer of that slowdown, it's quite a concerning signal, really.
Now, just getting away from the industrial metals, of course, what's been really striking about this week is the behavior of gold. Normally when people are selling, they look to go and buy the one thing that does glitter. We're not seeing that at all, are we?
No, I mean, gold's had a really tough year, and you would have thought it would have done well, but the crisis haven't been the real crisis for gold this year, the right ones, rather. What we've seen is the Eurozone, which is deflationary sort of crisis, the same with the Chinese stock market rout. So gold has struggled, really, as a haven. People have been going into US Treasuries and the dollar. And that's the other factor that's really been weighing on gold this year, is the strength of the US dollar.
Yes.
That's been going up. It's been weighing on gold. And also, we got some really bad news for the gold bugs last week. Last Friday, the Chinese central government came out and said we've only bought 600 tons over the last 6 years. The market thought they'd probably bought 4 times as much as that. They haven't been buying as much as everyone thought. So that real big sort of support that the gold bugs would look to all the time, yes, China's buying more for its reserves, it wants to back its currency with gold, has proved to be something of a myth, really.
Right. Now let's talk finally about the one sector that I suppose really did kick off the bear market in commodities. And we're starting last summer, and of course we're talking about oil. And this week we've seen US crude prices go back below $50 a barrel. A lot of shale producers now could be back under the gun here in terms of their outstanding debt levels. How much further could oil prices fall, and what are the ramifications of that?
Well, I think it could fall further. I mean, it could sort of retest the lows that it saw earlier in the year, back in January. And the reason there, as you allude to, is shale. We've still got relentless supply growth, despite the halving of oil prices over the last year. That supply growth has to come, has to stop. Producers have to come out of the market if the market is going to get into some sort of equilibrium or balance again. So we really need to see low prices to sort of, induce supplies wherever they might be, US shale, deep water, to stop coming on so we can balance the market. I mean, actually demand growth in oil hasn't been that bad this year. I mean, US gasoline consumption has been very, very good, but I think that price action is telling us that this relentless supply growth has to stop if the oil price is going to find some sort of level. Where that'll be, I mean, it's difficult to tell, but as you say, below 50, life is pretty tough for a US shale producer. Sure, they can hedge, but if you look at the back end of the oil curve, we don't have that out at the moment. That's at record lows. So I mean, it's very difficult for them even to hedge now and make money. So things are getting interesting and tough there.
So just finally, then, to sum up, is it really a case here of a combination of a strong dollar and weakening growth in China that's really driving a lot of the dynamics we're currently seeing in commodities?
Yeah, they're the two main factors, and the third one is just supply. Across any commodity you look at, from oil to iron ore, there is just so much supply coming on. The industry's invested, it's all hitting us now. and then we've got the two other factors there. So it's sort of, to use that sort of awful cliche,
Yes.
a perfect storm, but
Yes.
I mean, it really is. And it does look like, yes, the super cycle in commodities is well and truly over.
Great, thanks Neil. Well, to sum up, we've essentially seen a classic overinvestment boom, and that's all now ending, and the driver really being the Chinese economy slowing down, and also the fact that the US Federal Reserve is looking to raise rates, and whenever we've seen a strengthening in the dollar, we tend to see commodity prices really take a hit.